Well, good morning or good afternoon to everyone, and we want to welcome you to the Finance of America Wholesale webinar. And my name is Ginger Bell. Today, we are going to be sharing with you wonderful information on the Fix and Flip program through Finance of America, through Commercial Division. We're going to talk about fix and flips. We're going to talk about new construction. We're going to talk about rental property loans. And this is all for your real estate investors and small builders. So as we are getting logged on today, this has been a very, very popular webinar, and so we're excited to have all of you on the call today. Since we do have so many on the call, we do have everyone muted except for our speakers, and so there's two different ways that you can listen to the webinar today. You can either listen through your computer on your speakers, or you can call in on a telephone and listen to the audio that way. And the information in your toolbar is how you can dial in, or you can actually just listen through your computer. So the instructions are up there. Your telephone will be muted, and we will not be unmuting anyone during questions. So if you do have questions today, and I'm sure you have a lot of questions through this product, we will be holding questions until the end of the webinar, and we have a Q&A section there that will be covering a lot of your questions. But if you do have questions, there's two different ways that you can ask a question. You can type it into your Q&A box that you see at the top or the bottom of your screen, or you can type it into your chat box. Both of those will get the questions to us, and we will be answering those questions during our Q&A section. And so I always like to test and make sure that you all know how to ask questions, and that you also share with me that you can hear me. And so if you can type in, let me know what part of the country you're calling in from. And I always love to hear weather across the country. I'm in the Pacific Northwest today. We actually had a snowstorm yesterday, which was absolutely crazy for us here. And I'll be heading to Michigan next week, and we'll probably be in the middle of some very cold weather. And so we've got you weighing in here from Orlando and Massachusetts and California, sunny California, DC. Awesome, awesome, awesome. We're so glad to have you on the webinar today. So I do have two handouts for you. I'm going to put them into your chat box. So right there in your chat box, you can see links to our presentation, so the information we're going to be going through. And then there's also a wonderful handout there that is 25 things to know about commercial and doing business with Finance of America Commercial. So you can grab those handouts there. I am recording today's webinar, and so if you have someone who wasn't able to get on it, or maybe you want to share it with one of your real estate partners, I will be sending out a link to a copy of the recording that will come to you tomorrow. And so I'm going to send out an email to you tomorrow about that, and you can access that there. I'll also have links to this information, so you can access that information there as well. So that is it for my housekeeping. And now I would like to introduce to you our presenter today. And I've had the pleasure of working with Andy for a little bit of time, and I absolutely get so excited when I have an opportunity to talk to him, because I tell you what, this guy is just full of information, excited about this product, and I'm so excited to have him on our FAM Wholesale webinar today, and that is Andy Toms. Andy is a Vice President of Sales, and he is a seasoned real estate professional that is experienced in mortgage finance, in real estate brokerage, in real estate investing, in real estate investment syndication, in infill building, which I had to ask him, what does that even mean? He also is very experienced in buying your fix and flips, buy and hold, Airbnb investments. He's currently the Vice President of Sales and manages the national sales team of field market specialists for Finance of America Commercial. And I'm so excited to have you on the webinar with us today. So Andy, welcome. I know we have a lot of information to go through, and I'm going to go ahead and let you get started.
Perfect. Thank you, Ginger, so much. I appreciate it. Hello and welcome, everyone. First of all, let me thank you for taking time out of your busy schedule today to learn more about Finance of America and how we can help you grow your business, your income in 2019 with real estate investors, flippers, and small builders. So I have the opportunity to work with a lot of brokers across the country, obviously, and I'm talking to them all the time. And I'm always asking them about their local markets and trends and what's going on. And there's just a lot of uncertainty right now in the mortgage market. There's contraction, there's consolidation, there's layoffs, commissions are down, and we're all looking for new ways to grow our business. And that's probably why most of you are on the call today. So the bottom line is there's strong headwinds in the traditional mortgage business in 2019. And that's the bad news. But the great news is there's great opportunities to grow your business with real estate investors and small builders. So before I get started, I want to share with you what I think is the #1 benefit of working with real estate investors and small builders. The traditional borrower needs one loan every 5 years. The average flipper or small builder does 4 deals a year and needs 20 loans every 5 years. So there's a huge opportunity here to grow recurring income, and the potential is 20 times more profitable in this space. So what I'm going to cover here in the next, say, 15 or 20 minutes, I'm going to give you a high-level overview of how our company can help you grow your business, how you can benefit from our products, where to find new business in 2019, sales and marketing tools, and then we'll talk about some next steps. So Finance of America Commercial is a direct private lender. That's all we specialize in, is investor products for investors and builders. We have a national lending footprint. We lend in all states, but North Dakota, South Dakota, Utah, Vermont, Alaska. What's kind of exciting about being in commercial is even if you're not licensed, licensed in a particular market, let me back up. Okay, even if you're not licensed in a particular market, you can still get paid on that loan. Our field market specialists are licensed in almost every market, and you can refer a loan into a field market specialist in a state that you're not licensed in, and we can pay you a referral fee. So you own that customer, we can pay you a referral fee in perpetuity. That's kind of a nice feature. We have 3 operation centers: Irvine, California, Chicago, and Charlotte. That's where we house our underwriters and our processing. We do process these loans for you. You just focus on getting the items needed into us. We funded $2.8 billion in volume, and over 9,000 customers have been served. So we've done a lot of business, and we're one of the top in the space. What I'm most excited about, though, is we've got dedicated commercial FMS experts. So not only do you work with your FAM Wholesale AE, but they work with field market specialists. And I'm telling you, these are best of the best in the industry. These guys are experts, and they can show you and teach you everything you need to succeed in this marketplace. So you really have a 2-pack of people to help you grow your market and capitalize on the opportunity. So as I said, we design loans and loan programs specifically for investors. We're going to review 4 key products today: our fix and flip lines and loans, our new construction lines and loans, single rental property loans, and portfolio rental property loans. So to start off, where do we fit in? Well, on one end of the spectrum, we have traditional loans, agency loans, bank loans. On the other end of the spectrum, we have private loans, the hard money guys, money partners, which can be very expensive. Typically, a partner in a deal, whether it's a new construction or whether it's a flip, they want 50% of the profit. We're a much cheaper business partner than money partners. And then there's a lot of folks out there paying cash because they just don't know about our opportunity. That's why we need you guys. We need you guys to get out there and let people know that we can finance them very competitively. But using all cash on these deals really is not smart business. You put all your eggs in one basket and you really limit your ability to grow. We fall right in the middle between traditional and private. We do loans for real estate investors and builders that fill in the gaps. Some of the key highlights: there's no personal income requirements. There's no property count maximums on our rental property loans. We are an asset-based lender. So what that means is we're gonna underwrite them like it's a business, right? We're gonna look at the cash flow of the property, and we're gonna look at our equity position of the property. We have a complete suite of products for investors. Again, that's all we do. We have the most competitive interest rates in the marketplace right now for the experienced investor. Our starting rate is 6.99% for the most experienced investor, and the most experienced investors love us for that because we are the most competitive out there. But what's kind of exciting is with this market is emerging, and we are institutionalizing hard money lending space. So what do I mean by that? The hard money guys out there on the right side of the spectrum, they're charging 10, 12, 14%, 2 to 4 points. We're significantly cheaper, significantly better priced, and a significantly lower cost. So we're really pressing those hard money guys. And as this market, this industry continues to emerge and grow, we're forcing them. A lot of them will be forced out of business. Now, that being said, they have a niche, and their special niche is closing very fast. 3 days, 5 days, 7 days, that's not what we do. So they'll always be able to compete on speed, 3, 5, 7 days, where we're not going to be able to compete in 3 to 5, 7 days. All right. Before I get into the products, I want to take a quick look at the definition of commercial, or our definition. What we do is non-owner occupied, residential only. That's never been occupied by an owner, never intended to be occupied by the owner. They're going to have to sign an affidavit to that. And multifamily. So multifamily, 5 to 20 units in our fix and flip new construction and portfolio loan program. That's about the extent of commercial. So what you typically think of as commercial is what we don't do. So what we don't do is commercial real estate, hotels, car washes, restaurants, businesses, industrial, office, owner occupied, can't touch them. Second homes, vacation rentals where they're occupied part-time by the owner. We can't touch those because they're occupied. We are rolling out with a short-term rental program that will be designed for Airbnb. That's coming soon, next 2 to 3 months, I anticipate, or sooner. We don't do mobile homes. We don't do acreage, large acreage, greater than 20, bed and breakfast, co-ops, working farms, and multifamily greater than 20. Now, we will consider multifamily greater than 20, say it's a 25 unit, a 30 unit. I encourage you to share those opportunities with your AE and with your field market specialists, because we might make exceptions for the right operator if it makes good business sense and they've got a demonstrated historical track record of performing in 20, 30, 40 unit properties. So let's look at fix and flip loans. It's a huge opportunity for you. There's over 207,000 homes flipped in 2017. Now the numbers aren't out for 2018 yet, but I anticipate that it's going to be this number or higher. What's really cool about this product though is flippers and real estate investors are active in both up and down markets. Why is that important? Well, we've been on an up run for 10 years, right? And everyone's talking about the coming pending potential crash in real estate. Well, I assure you, if there is a haircut in the real estate market on values or anything like that, or a compression, the flippers are coming out of the woodwork. So it's really a resilient product and a resilient customer. And we're going to see a lot of business when we see the next downturn. All right, so where do we find flippers? Well, realtors are flippers. You'd be surprised at how many times we're doing presentations and half the group there are flippers to realtors, and half the group in the crowd are flippers. You want to also look for those realtors who work with flippers. There are certain realtors out there that's all they do. Those are the people you want to know. You want to network on Facebook and LinkedIn, searching for flippers, and followed by your local marketplace and local city. It's a great networking opportunity. Network through the local REI groups and meetups. That's where all these guys are hanging out. And then financial planners, CPAs that focus on the real estate investor, and real estate attorneys and probate attorneys. Great opportunities to find the flippers. They know who they are. But my single best go-to, I buy properties across the country, sight unseen, in multiple states. And I always start when I'm going into a new market. I find out who are the local closers that are closing the most business and the best title reps. And I target those guys and I get all my intel from them. They know where the flippers are. These guys know pretty much, they have their hand on the pulse of the market. They're great intel sources. All right, so what do we lend to these guys when we find them? So here's a high level overview of our fix and flip loans and lines. Our interest rates start at an industry low of 6.99%. It's risk-based all the way up to 11.99%. These are interest-only loans. It's for a 12-month term. So they make their payments over the 12-month term, and they have to either pay us off or they have to sell the property and pay us, or refinance the property, into a single-family rental property. The maximum terms that we offer are 90% of the loan to cost of the purchase price based upon the as-is value, 90% of the rehab budget that they submit, based upon their repair budget. And as long as we have a 75% LTV or a 25% equity cushion, we're good. We'll walk through an example here in a second. Most of our customers start out by getting underwritten for their maximum exposure limit. So we typically will underwrite the operator and the entity and approve them for a $250,000 to a $10 million line. Once that exposure limit is approved, it's good for 12 months. Then all they need to do is go out and find individual properties and loans. You get paid on loans and properties. And those minimums are $50,000 per loan on a flip, up to $2.5 million on a, say, luxury spec home. The property types that we offer are single family residence, 2 to 4, condos, townhomes, multifamily, 5 to 20 units. So here's an example of a $1 million exposure limit entity loan. We're going to look at 4 criteria in order of importance to determine the maximum exposure limit terms: their loan and line size, their interest rate, and the maximum LTV and LTC. And again, once we approve them, your borrower and their business entity and the guarantors, that exposure limit is good for 12 months. In order of importance, the first thing we're going to look at, and the most heavily weighted thing, is experience. We're going to look at the completed flips and builds in the past 2 years or active rentals in the past 2 years. The key thing here is they need to be titled. We have lots of really experienced remodelers, really experienced builders, and they come to us and they have tremendous experience, but they haven't been a titled owner to a rental property or a titled owner in the flip. And we're looking for people that have had skin in the game and risked money. Second thing we look at is liquidity. We look at liquid assets. They must be equal to 20% of the line amount and the exposure limit. Then we look at credit score. We use the highest mid score of all guarantors. The low end is 620. Our highest tier is 700 plus. And the last thing we look at is net worth, stated net worth. And we need a minimum of 30% of the maximum exposure amount. So to qualify somebody for $1 million exposure limit, go to experience, E3. To get a $1 million line, they would have to have experience of 3. 3 what? Either 1 flip and 2 rentals in the last 2 years, or 2 flips and 1 rental in the last 2 years. We would need to verify $200,000 of liquid assets. They would need a 700 FICO score of the highest mid of all the guarantors, and they would need to show stated net worth of $300,000. That could get them a $1 million exposure limit. So now let's take a look at a fix and flip example. Assume your borrower has a $1 million exposure limit. They're approved. They're purchasing a $100,000 flip property. The purchase price is $100,000, and the value of that as-is value is $100,000. Maximum LTC is 90%. We'll advance $90,000 at the closing table to purchase the property. The rehab budget is $100,000. The maximum LTC is 90. We'll advance $90,000 at the closing table. We'll advance the full amount of $180,000, and they will start paying interest on the full amount. We can do a $180,000 loan as long as the after repair value is $240,000. Well, how do we come up with that? Simply take $180,000, divide it by 75%. That gives us our 25% equity cushion. As long as the ARV is 240, we can advance 180. So now they had a $1 million line. They used $180,000. So they have $820,000 of available pre-approved exposure limit to go do more builds, more flips over the next 12 months. What a lot of our loan officers are doing is they're getting very active for their own selfish reason to help them go find another $820,000 worth of property. So they're networking with, one of the biggest challenges right now is trying to find inventory. So we want to get the borrowers to utilize the full line over the 12-month period, or utilize it twice over the full 12-month period. All right. Hold on here. I lost my. All right, there we go. Okay, so the next example is a cash out example. This is a really cool loan structure. So assume your borrower has the same $1 million exposure limit. They purchased a rental property, I don't know, 2012, 2014, over a year ago, because we can go off of appraised value if they've owned the property for more than a year. They bought it for $50,000. Now they want to rehab this and flip it. So this is a refinance of the home. The value is $100,000. We can go 90% LTC. So we can advance them 90% cash out, 90% cash out at the closing table. They can use that cash out to actually qualify for their liquidity requirement for the line that we gave them. The rehab budget in this scenario is $100,000, same 90%. We can advance $90,000 in escrow, again, $180,000. As long as we get an after repair value of $240,000, which is 75%, we're good to go. The $1 million line, we take $180 off. We're at $820 left to use. Okay, so that's an overview of the fix and flip product. I'm having a problem with my clicker here. Okay, so now let's take a look at the new construction loans. So the small builder market is really underserved. We just got back from the IBS, International Builder Association. There were so many guys in there that either they don't qualify for the bank loan or they're paying outrageous rates with hard money guys. So this is a really, really good niche market to develop. And what you want to look for is you want to find all those urban infill guys, right? That are going into the hipster locations, scraping, building these nice high-end, high-quality, new modern houses in downtown urban areas. They need our money. Spec home builders need our money. Model home builders need our money. And then those small builders doing 2 to 20 builds a year in your local market. That's the target. So where do we find these guys? Again, the realtors, they know who they are. Facebook, LinkedIn groups, local regional builder events, participating in those and networking at your builder association. And again, the go-to intel specialists are the closers. So our new construction product is underwritten the same today as our fix and flip. That's about to change. We're going to be pulling this away as a standalone product and coming out with several enhancements. And we're super close to that. We're really good in the new construction business, and it's going to get a lot better in short order. Okay, so we do build-ready lots only, right? We don't do any infrastructure loans, development loans, no curb and gutter, build-ready only. Loan amounts, $150,000 on the low side to $2.5 million, say on a luxury custom spec build. So our funding maximum is up to 75% of the lot value if they're purchasing a lot value or refinance value if they have permits in their hand at the time of submission. 60% of the lot value without permits. We'll do 90% of their construction budget costs. As long as we have a 75% ARV, we're good. And remember, the land must be entitled and ready to build on. These need to be build-ready lots. So here's an example of a new construction purchase. Assume the borrower, again, has this $1 million exposure limit. They're buying a lot, or they bought this scraper. They found this really cool infill lot in downtown Indy. They're going to scrape it in Indianapolis. They're going to scrape it, and they're going to pop up a nice new luxury property, or a nice new home. All right, so they do not have permits in this scenario because they don't own the lot yet. Okay, so the lot scrape purchase price is $100,000, and that's the as-is value. The maximum LTC that we would do is 60% because they don't have permits. So we could advance $60,000. They would need to come up with 40% down payment. The build budget, $200,000. We could advance 90% of their total build budget of $180,000. That gives us a max loan that we're going to advance at the closing table, the full amount, $240,000. The after repair value on that, again, we need a 25% equity cushion, 240 divided by 75%. We need that to appraise for at least $320,000 to advance the 240. We take the 240 off the $1 million line, that leaves us with $760,000 worth of exposure that they can go start 2 or 3 additional builds or 2 or 3 additional flips. What's really cool is we can also do this program in a cash out situation where they want to cash out of a lot that they already own and then build. So assume your borrower, again, $1 million exposure. They purchased a lot for $50,000 a year ago and they paid cash for it. Well, they've owned it and they've got their architect involved. They got their plans, they have their specs, and they've got their permits in their hand. So what we can do in this situation is refinance their lot. The lot is now worth $100,000. It's been seasoned over a year. We can give them 75%. Maximum LTC is 75% because they have permits. We can advance them $75,000 cash out on that lot that they can use for their construction or use to buy another house. And we can also use that to qualify for the liquidity requirement for the line of credit. The build budget is $200,000, 90% of 200 is 280. That puts us at a total of $255,000 for the loan. Again, we need a 25% equity cushion. So in that situation, they have $745 left to go spend. All right, so now I want to shift gears to our single rental loan. This is a huge opportunity. Oops, sorry about that, trigger finger. Hold on. There we go. All right, sorry about that. Okay, so single rental loans, there's 27 million single rental units out there. We're in a rentership society. The opportunity is huge. It's a $4 trillion marketplace. Where do we find these loans? Property managers. They know all the landlords, right? So networking with property managers. You know, I've done email distributions onto all their distribution lists to market for refinance to all of their landlords. They might have 500, 600, 1,500 properties that they're managing. And if I can get on that email distribution list for a cash out refi, pretty good opportunity to pick up business. Turnkey rental providers. So those are the guys that go out there and they buy it, they fix it, and then they sell it as a turnkey rental property to a buyer. Well, those buyers may already be capped out, 10 Fannie Freddie loans, and we have no limit, so we can finance the buyers of turnkey rentals. Obviously, realtors who work with investors, great target. Again, there's a trend here. These same things keep popping up. You can just find a ton of our business in these same groups. All right. So the single rental property loan is an asset-based loan for landlords. There's no personal income required. There's no tax returns required. There's no limit on the number of properties that we can finance. We can finance up to 80% of the purchase and 75% cash out. And so I have to share with you, like I would say 90% of our business is or more is cash out. There's a lot of people right now that have rental properties and they're cashing out of those properties for whatever reason, to buy more properties, to flip properties. But a lot of people that bought after the crash, they've built up a lot of equity. And this is our most popular product, is cash out for rentals. The interest rates range 6.5 to 8.75. These are 30-year loans. We do have a prepayment penalty, but it's pretty nominal. It's 3% the first year, 2% the second year, 1% the third year. The fourth year, there's no prepay. There's no balloon on this loan. It's a true 30-year amortized loan. And we do offer an interest-only option. Okay, last but not least for products is the rental portfolio loan. So 10% of that mammoth market of single-family rentals owns 5 or more units. Our rental portfolio loan can be used for refinancing an existing portfolio. It can be used for purchasing a portfolio, which is really growing right now. There's a lot of portfolio. People have, you know, I've got one for sale if anybody's looking for one. But there's a lot of people just repositioning right now and selling off what they've owned and maintained for a number of years. Or what's really cool about this product is we've got investors that might have 5 houses in Kansas City, 10 houses in Chicago, 14 in Columbus, Ohio, and 15 in Tampa Bay. Well, we can, and then there might be a hodgepodge of everything. They might have seller carry on some of them, private financing, bank loans on others. So we can take that entire portfolio, roll it all into one single mortgage payment, one single loan, and we could take cash out of that entire portfolio. Then they take that cash out and then they go buy an apartment complex. And we can help them with that. So anyway, pretty big opportunities with the portfolio loans. So where do we find these? I'm not going to go through this because it's pretty much the same place that we find them for the single rental properties, and it's kind of a consistent pattern here. All right. So the highlights of the portfolio loans: blanket loans for multifamily properties. It's one single loan for a group of properties. It is a 30-year amortized loan, and it does have an interest-only option as well. The key difference, though, is there's a 5-year or a 10-year balloon payment with these loans. And the biggest difference is yield maintenance. That's a prepayment penalty, and it's a hefty one. So the quick pre-screening when somebody thinks they want to get a portfolio loan is if you want to stay in your properties definitively and not peel off and try to partially release, because once this entire portfolio is encumbered, we securitize that. Then we put a yield maintenance prepay on it because we have to guarantee the return to those investors. So they don't make it easy to peel off one property 3 years later. So this is really not designed for that kind of borrower. It's designed for the borrower that says, I'm definitely going to own this thing for the next 5 years. I'm not moving. I'm not selling anything, or 10 years. And if they're not going to do that, there's a slightest indication that, well, a few more years, I got to put a kid through college. I'm going to peel off 3 of these. I revert right back to the single loan program and sell them the single loan because it's really expensive to pay that maintenance fee. All right, interest rates, competitive, 6% to 7.5%. It's all risk-based. Minimum loan size, $700,000 or 7 units. So you need approximately $1 million portfolio to qualify. Minimum property values within there. So, if you have 10 properties in there, the minimum loan size is going to be $50,000 minimum per unit. But that, anyway, minimum loan size of $50,000 per unit. No personal income and no tax returns required, and 75% cash out or purchase. So that covers the products. Let's shift gears for a second here into some of the sales and marketing tools because we've got some cool things for you guys. New coming out real soon, within the next 30 to 45 days, is our new WLP 2.0 origination tool. We have a front-end system, WLP 1.0 right now, and it makes it really, really easy for you to generate a conditional quote. But what we're doing is we're totally revamping that. We've learned how to streamline that, how to make it more efficient and more productive. And we're just super excited to be rolling this tool out. It's going to be very powerful and increase efficiencies tremendously. We're also streamlining our entire application process. So for the past several months, our team has been forensically looking at how can we improve the experience for the customer? How can we streamline all of the things that we need and make it easier? That's going to roll out in conjunction with WLP 2.0. On the sales and marketing portal, you're also going to find guidelines, help guides, training tools. We have customizable broker marketing flyers. We have customizable presentation decks as well, so you can go out and sell the sizzle to all your realtors and all your builders. Okay, so that pretty much wraps it up, and I want to leave you with this, with the next steps. This is an incredible product, and I just encourage you, with the slowdown in the markets, we're booming, right? Our business is booming and it's growing. And when the flip numbers come out, even if we're flat, we're taking market share away from some other higher price lenders. So I anticipate our market is going to continue to boom and continue to grow. Whoops, let me back up one space here. So I encourage you to embrace the product. We want to work with you. We're really committed to this entire space. I encourage you to take action to do this. Schedule a branch training webinar. I just gave you a high-level overview. Our FMSs, our field market specialists, are experts. They know this product like the back of their hand, and they can teach you how to be successful with it. So after this call, email your FAM AE today, request a branch training webinar, get on your field market specialist training calendar ASAP. These guys are really busy. I would get on it right away. And just remember this, you do not have to be an expert in this product. That's the beauty of it, because our field market specialists can handle the heavy weight for you guys. You just need to get started. You just need to work with an expert, and that's what we can provide for you. So that's pretty much what I have for you today. And Ginger, I would like to turn it back over to you now.
Awesome. Great. And excellent information, Andy. Thank you so much. So we went through a lot of information, and there's some incredible resources available that Andy mentioned to you. We also have customizable flyers that you can use. It's available on FAMU. And if you're not signed up with our Finance of America University, then you want to contact your Finance of America account executive and get set up on FAMU, because there's some incredible resources. I mean, we have training in there on all the different products that Finance of America Wholesale offers, but there's also these customizable flyers that you can access as well. And so now I want to move on to questions. And we've had a lot of questions. You guys have done a great job putting in questions. I know John and Kelly have been busy answering those. And so we're going to open up to questions now. I've written down a few that I think I'm going to actually start out with. And so with us today, in addition to Andy, on his team, he has invited two of his field market specialists, and that is John Kate from Florida and Kelly Soda from California. So thank you, John and Kelly, for joining us.
Hi everybody. Thank you.
Awesome. Okay, so while I'm keying up these questions, I'm actually going to post a poll onto your computer there, so you should see that if you're logged in. You're seeing our slides, and we're interested in finding out, where are you guys at? Are you currently working with fix and flip investors? And so while you're weighing in on that, you can answer yes or no. I'm going to ask the first question. And, we often get into a lot of acronyms in our industry. And for those of us who are not familiar with the commercial residential side, one of the first questions that we had that I've seen from a couple of you is, what does ARV and what does LTC stand for? So John, I'm going to ask you to answer that for us.
Sure. The ARV is after repaired value, and LTC is loan to cost. So we're looking at, after repaired value is given to us by the appraiser after reviewing the borrower's scope of work budget. The budget actually becomes part of the appraisal. It's actually stamped into one of the pages on the appraisal. The appraiser's responsibility is to give us two values when they go out and value a fix and flip project. Number one is as-is value. So on a purchase transaction, as-is value should be at least purchase price or higher. And then they have the responsibility to review the budget and go out and find comparable sales that have closed in the last 6 months that have similar improvements to what our investors are planning to make to that property. So if they're planning on doing a new roof and a kitchen bath remodel, new carpet, new paint, then the appraiser is going to have a whole set of schedules looking at comparable sales with those improvements, and that's how they come to after repaired value. So again, LTC, loan to cost, that is our loan size based on the purchase price or hard costs of the property. And then ARV is the loan to value after repaired value.
Excellent. Thank you. Okay, so I'm going to share our first poll and share the results. So we have not quite down the middle. So about 58% of those who answered our poll are not currently working with fix and flip investors, and then 44% are working with. So those of you who are, here's a great opportunity for you to be able to use this product to offer to them. But those of you who aren't, huge opportunities there. And Andy, you talked about that.
Yeah, huge opportunities.
Okay, so I'm going to go on to our next poll question that I'm going to put up here, and just wanting to know, same thing, are you currently working with rental property investors? And so Andy, you talked a little bit about what that kind of person looks like. So I'm going to launch that, and I'm going to ask the next question that I saw come up, and that is, how is title held? Can the title be held in LLC? Is it a personal name? Is it a corporate name? How can title be held?
This is
Kelly, you want to take that?
Yeah, I'll take that. Title can be held on our single rental program, which is for the single family condominiums, townhomes, and 2 to 4 units. That's the 30-year fixed product that Andy went over. That can be taken as an individual or in an LLC. If they're doing the portfolio, which is the 7+ doors, that has to be taken within an LLC or a corporation only.
Very good. Okay, so I'm going to close this poll out, and we're going to share the results on this. And our question was, are you currently working with rental property investors? So this one, we're showing 61% of you are. So more common to be working with rental property investors than the fix and flippers, whereas 39% of you aren't. And again, what an incredible opportunity for those of you who are working with those rental property investors to bring to them another offering and another opportunity with that. For those of you who aren't, hey, it's a great time to jump on board with this. And so I have one more question in our poll that I'm going to put up here. And I'm going to go into our next question. This poll, We want to know, are you currently doing business with Finance of America Wholesale? And so we have 3 different options. If you're active, currently signed up, ready to go, then this is great because you're ready to use this product. If you're inactive and you've done business in the past but not currently, then it's a simple process as far as being able to do that. And if you're interested in signing up with Finance of America, then it's a great opportunity for you to do that. So I'm going to let you weigh in on that, and I'm going to ask my next question, which is, how are you verifying the builder's build budget?
John, do you want to take that?
Sure. Yeah, I'll take that. As I mentioned earlier, on all of our transactions for the fix and flip, whether it's existing property acquisitions and rehabs or ground up construction, we're going to require a budget. Now, on construction, we're going to require detailed plans, specs, and a budget. And that's going to be submitted to the appraiser. And it's also going to be submitted to a company, a third-party vendor we use called Granite Construction Inspection Services. That's really our construction eyes and ears on the ground. They are going to be responsible for, on a new construction, looking at the land, going out and going to the job site and looking at the land as it stands now. And they're also going to review the detailed plans and specs and budget. And they're going to create a construction report. And that construction report, it has to make sense, right? So if a builder is saying that they're going to put in level 4 granite, then for that space, that cost of that granite needs to be within market range. If it's too high or too low, the granite construction report will call that out. So we do have a checks and balances system, and that is Granite Construction Services. Now, that construction report and the guy or gal that goes out and does that construction report is going to be the same person that goes out and inspects the completion of the work, because we allow in all our products for fix and flip, traditional fix and flip or ground up construction, we offer multiple draws if they choose to. So we don't cap the amount of draws. We just send the granite inspector out for every draw request, and the same one that does the inspection is the same one that usually most of the time is the same one that did the construction report and understands the project.
Excellent. Thank you. Okay, so I'm going to end the polling on this question, and we'll share the results. And so we're excited to see 75% of you are active and currently signed up with Finance of America. We want to thank you for your business and say congratulations, so you're ready to use this product if you haven't used it yet. So that's fantastic. And then those of you who aren't, we will have information. We'll do follow-up with you and be able to share that information as far as how you can get started using this product. So I'm going to continue on and ask a couple more questions that we have. One question that I'm saying that I think is recurring is, can these loans be used to pay off current liens on properties? Kelly, do you want to take that?
Yeah, can these be used to pay off current loans on the properties? Is that for fix and flip? If it is, yes. So
okay.
If we have a borrower approved on the line of credit, or we're getting them approved, and they have a property that they already own, and they either own it free and clear or they have a mortgage on it, we can go ahead and put that on the line of credit. We can refinance it and give them up to 90% of the purchase price and 90% of the rehab, or 75 ARV if they qualify for max terms. So we can treat it as a refinance on the line of credit. And then also we can do refinances on the single rental loans and the portfolio.
Excellent.
And I'll just add to that. We don't allow any subordinate financing, so it's actually a requirement to pay off any subordinate financing on the subject property that we're going to finance.
We don't allow anybody in front or behind us on any of our deals.
So only in first position. Great.
Correct.
So I'm going to ask a couple more questions, and then we have so many questions, and this is fantastic. And I had a feeling that this would happen with so many questions. So just to let you know that we will be sharing contact information for you. If you're not sure who your Finance of America account executive is, and I'm going to, in my follow-up email, I'll send you contact information for Greg Woolsey, and that way he can get someone assigned to you if you don't have a FAM AE. and then also follow-up information on how to get some of your questions answered, because we do have a lot of questions. And also, this is the first webinar we've done. We do a lot of webinars at Finance of America Wholesale. This is the first one we've done with commercial. And let me know if you guys want to see more. I've talked to Andy. It's like we can do something every month and then talk about a different topic. How you promote this, how you talk to. I see a lot of you are asking, is there a slide deck available for you to go and do training for real estate agents on this? And the answer is yes,
Yeah.
absolutely. We have lots of opportunities with that. But type in their chat box and the question is, let me know if you want more information on this, if you want us to continue to do monthly webinars on this product and kind of some of the things that you would like to see. We'll do that. So one of the questions that came in that I think is important to know, is this available in larger metropolitan areas only? Is there a population minimum?
John, you want to take that one?
Oh, yeah, sure. No, there's not a population minimum. On our portfolio blanket loans, we do run some demographic analysis. And if we find an area that maybe is more remote or has some declining values or different types of demographic issues, we would call them, we may hit the price a little bit and possibly reduce the leverage on that. So that's on the big portfolio loans. Other than that, we don't, on the fix and flip, we're going to be much less restrictive on the geographic location of the properties because it is short-term money.
The key is comps. Can you find suitable comparables if it's going to be too far remote? So, it's going to come down to the asset valuation. Because, we're doing properties, say, on a, remote area of Oregon hillside, okay? As long as we can find comps and we're doing a nice luxury second home, then, we did that deal. So I think it comes down to the comps as well.
Very good. Okay, so I'm going to take a list of the questions. We're going to share those with the field market specialist as well as your account executives. And so just so you know, FAM Wholesale, you have your FAM account executive. That is your account executive. Because commercial is such a great product, and because there is more that goes into the qualification process, FAM does have field market specialists in the area of commercial. So you do work with your FAM AE on the wholesale side, and then they also work with, and you can also work with a field market specialist. So maybe, Andy, if you want to explain that a little bit, we're getting some confusion as far as how that works between their FAM wholesale AE and having a conversation with the field market specialist.
Yeah, so 100% you should follow up with your FAM Wholesale AE. That's where the focus is. We partner and support the network of FAM Wholesale AEs nationally. So Kelly is assigned to X number of the wholesale AEs. So all the FAM Wholesale AEs are assigned to a field market specialist, okay? It's one and the same. You technically can go to Kelly or John or any of our others. Theoretically, the credit is going to go back to FAM Wholesale, but you should always work through your FAM Wholesale account executive first. And then as you build relationships between the three of you, right, then you'll build a relationship and you'll contact the field market specialist maybe because you have a call about expertise. The wholesale AEs, you really don't want to go to them for the detailed calls, the product expertise calls, because they're going to defer to the FMSs anyway. So, but we are one team, okay? We are unified. We are one team. Expertise, field market specialists, business development, and getting a webinar put together, direct everything to your FAM AE. I hope that clarified it. Not
Absolutely.
Sure
Thank you. Thank you. So again,
okay.
I appreciate all the questions. We have more questions than what we can answer today, but we are available to answer those. And so I'm going to be sending out follow-up. So first of all, I am recording this. Yes, I know several of you hopped on late, and so I am recording. The copy of the recording will be sent out to you tomorrow. I'll send it up in a follow-up email. I also will have a link to the handout that we have, the 25 things you need to know about doing business with Finance of America Commercial. And then I also will have a link to the slide deck. So we have all that information for you. And then I'm also have information for you on how to get signed up with Finance of America. So I want to thank Andy and John and Kelly for being on. And I'm going to move on to our next portion, which is talking about upcoming webinars. And so we have several webinars coming up in March. On March 14th, we have Grow Your Business with Your Home Style Renovation Loans. For our wholesale clients, this is a new product for you that will be available starting in March. So you can get signed up for that webinar, and we'll have information on how you can use the Home Style Renovation Loan Program. On March 21st, we'll have a renovation made simple with FAM Reno. We're going to talk about the FAM Project Manager, which if you have used our FAM Project Manager, you know how great it is to have a team to help you with your renovation loans. And then on March 28th, I am going to be doing a webinar on marketing and what I call edu marketing. And so you can find out about those webinars at FAMU events. And so you want to make sure and get registered for those. The one I'm doing at the end of the month on edu marketing is what I use. And if you've been on my webinars before, you know I talk a lot about how we can edu market. And so talking about edu marketing, what is edu marketing? It's taking education plus marketing and putting it together. It's what I wrote about in my book with Jack Canfield, and it's mastering the art of edu marketing. And it's not just what I do, but it's what a lot of professionals do in the industry. Gary Vaynerchuk, if you know who he is, his parents owned a brick and mortar wine shop in 2006. He began a 20-minute daily YouTube show that he called Wine Library TV. And in it, he educated and he shared reviews on wine. And he used what I call edu marketing to grow his business. And today he has an audience of over 1.3 million viewers. And so I had an opportunity to speak at Agent 2021. Gary asked me to come and speak about mortgages, and that was in January in Miami. And I learned a lot, not only from speaking in this event, but being at this event. And so that's what I'm going to go through in my webinar. And the things that we talked about today with the commercial products, with what we talk about for renovation products, with what we talk about for VA products, these are all things that you should be using in your business. So not just attending the webinars and the information today, but going out and educating your real estate partners, educating builders, all the things that Andy talked about. And I know he had a great list of where can you find these type of investors? Where can you find realtors that are doing work with these kind of investors? And he gave some great ideas on that. Those are the kind of things you want to be able to take information and to go out and to share your information and to educate them on the process. So in the webinar I'm doing the end of the month, I'm going to go through this entire content creation process with you, starting with identifying your customers, your customer segments, what products and services you are offering, creating a list of your customer questions, identifying your delivery channels, determining your topics, and then developing and delivering your content. So if you're interested in leveraging your expertise and finding out how you can take a fantastic product like the commercial products, like the fix and flips, like the builders, then be able to use those, then you want to make sure and register for that webinar. And you can register for all of our webinar at famuevents.com. Make sure and remember your next steps, and that is to schedule a branch training webinar. So email your FAMAE, request a branch webinar training, get on with your field market specialist with their training calendar to find out how you can get more informed about this product. And you do not have to be an expert to get started. I think it's just a matter of aligning yourself and working with the expert. And then finally, here is Andy's information as well. Andy, thank you so much for this information. And John and Kelly, thank you for joining too. We're excited to have this product that is available. And I want to thank all of you for attending, and we will see you on the next webinar.
Thank you.
Thank you.